This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston and this is the international edition from interest.co.nz, and today we lead with news. Markets see a cooling US labour market and signals ahead of this weekend's August non-farm payrolls report. But first, US mortgage applications rose by an insignificant 1.6% from the previous week in the last week of August, a low and stable situation. They are now 4% lower than the soft year-ago levels. Their benchmark 30-year fixed home loan interest rate slipped slightly to 6.35%, and its lowest since May 2023. And yesterday, we mistakenly reported US retail sales from 2 weeks ago, up 5% at physical stores from a year ago. The actual result from this metric for last week was very much more positive, up 6.3% from the same week a year ago, its best rise since the end of 2022, when the very low year-ago base boosted results. This current result is actually quite impressive. US exports hit their highest level ever in July at $267 billion US dollars. Imports rose too, but not to a record high. Their full trade deficit rose to $79 billion, but that was well short of records set in the pandemic. This deficit continues to be quite small in relation to US GDP. And US factory orders were solid in July. New orders rose by 5% from the previous month, above market expectations of a 4.7% increase. Year on year, they're up 3.8%. Better, new orders rose by 9.8% for durable goods, lifted by transportation equipment, which was up more than a third. But there was a sharper than expected drop in July job openings in the US. The number of job openings fell by 237,000 to just under 7.7 million in July, from a downwardly revised 7.9 million in June. That is the lowest level since January 2021 and below market forecasts of 8.1 million. This is a first real sign of a cooling labour market there, although the new order data may make that a temporary dip. This is the data that the financial markets are paying attention to today. Meanwhile, the US Fed's Beige Book survey for August painted a modest picture of the American economy, but with the balance of opinion that things are picking up from the current stable positions. This survey found little evidence of labour market stress. Canadian exports came in little change in July, holding the higher levels first achieved in mid-2022. And as expected, the Bank of Canada cut its policy rate by 25 basis points earlier today to 4.25%, its third consecutive cut, saying excess supply in the Canadian economy continued to put downward pressure on inflation there, which is now running at 2.5%, its lowest level in more than 3 years. In China, the Caixin Services PMI eased a bit, but is still expanding. Incoming new business and activity remained in growth, with export business rising at a faster rate in August. Meanwhile, capacity pressures were still evident, but firms reduced staffing levels amid cost concerns. And Bloomberg is reporting that China is considering cutting interest rates on as much as $8.5 trillion worth of mortgages in 2 steps to lower borrowing costs for millions of families while mitigating the profit squeeze on its banking system. To do that, financial regulators have proposed reducing rates on outstanding mortgages nationwide by a total of 80 basis points, part of a package that includes an accelerated timeline for when mortgages become eligible for refinancing, and that's according to people familiar with the matter. The first cut may come in the next few weeks, while the second move could take effect at the beginning of next year. That's according to people asking not to be identified. The EU said producer prices are now edging lower in July from a year ago, helped by the falling cost of imported energy. And Australia said its GDP was 1.5% higher in its June year after a smaller than expected 0.2% expansion in the June quarter. Helping keep it positive was record federal government spending on the public payroll and on the healthcare system. Meanwhile, an August survey of the Australian manufacturing sector was particularly grim. The Australian Industry Group Industry Index dropped sharply by 11.3 points to minus 30.8 in August, further deepening the contraction that has persisted for 2 years now. The US Treasury 10-year yield is now at just on 3.77% and down another 7 basis points from yesterday. And the price of gold will start today up a minor $2 from yesterday at $2,493 an ounce. And oil prices have held from yesterday's lower level at just under $70 a barrel in the US, while the international Brent price is still just on $73.50 a barrel. And the Kiwi dollar starts today unchanged from yesterday at 61.9 US cents. Against the Aussie, we're nearly 20 basis points higher at 92.3 Australian cents. Against the euro, we're 20 basis points lower at 55.9 euro cents. That all means our trade-weighted index starts at 69.9 and down 20 basis points from yesterday. And the Bitcoin price starts today at $57,910 and virtually unchanged from this time yesterday. However, volatility over the past 24 hours has been moderate at just on plus or minus 2.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.